Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up. And this wrap-up is for Tuesday evening, the 4th of May, 2021, just after 6:35 p.m., and that is Central Time. All right, folks, end of an era. I want to go on that first. The CME Group, I just read in the Wall Street Journal that they are not going to reopen the trading pits other than for the euro-dollar options, which are open and trading right now. That's there. They're going to allow some of the traders to get back in for the S&P options on the full-size contract, I guess it is, and the futures, but game over. That'll be closed down in September. One pit left. End of an era. That's where I cut my teeth. And boy, when I go into Board of Trade, how many of us guys were there? And that's where we learned the first part of trading. And of course, I took it another level for me. And I didn't like the floor. I liked being in an office to do this. Why? The guy would offer 100 lot next to me, and I'm in the pit at that point and going, oh, I've got a 2 lot to buy for myself or whatever I tried to trade. I'd get it scared as can be. He's got 100 to sell. What do I know? Well, you get off that and you get away from that, and it's different. Some people thrive by it, but I've yet to find the big traders that have made it didn't make a very good transition from the pits outside. So it is the end of an era. It's very sad. And I know friends that are going to be out of jobs, both people that ran the back office people on the floor. There were quite a few people on the floor still, and that'll all be gone. I don't know what they'll do with the building condominium maybe, but not in this market. All right, yesterday when I did shoot this tape, it didn't work and I had a dinner engagement, so I left. But remember, this is a freebie. And I appreciate when you say, oh God, you didn't do this for us yesterday. I did it for all my paid subscribers in the mornings and my full research, they get it. This is a freebie, and if my other things take place, they take place. I appreciate the audience, but I'm offering you an awful lot, and it is free. So let's talk about this. The gold market did not collapse. It has trouble at the 1800 level. Had you seen what I did shoot yesterday that didn't take, that's what I was saying. The silver got very high and gave back about half of that gain, 40% of it today. Copper's not giving up a thing. Platinum looking good. Palladium looking good. So today's fear in the marketplace was part that Janet Yellen, our ex-Fed chair and current Treasury Secretary, did not misspeak. She spoke the truth when she said that it's likely that we're going to get modest rate increases. She then walked it back in the afternoon because the market got so unhappy with her, blah, blah, blah. Was she tipping the Fed's hand? Come on. This is a Fed chair. She spent years speaking to the public. She knows what she's saying. She doesn't misspeak. Interesting, like it. It's what she thought. Did the market fall apart on it? Not really. So let's go to the chart action. You're still on the weekly chart fighting what I told you you'd probably get up to, and that is the 18-week moving average of closes, which it still hasn't been able to poke through and stay over. You're at 1777.80 right now. That 18-week average, the week average, is 76.10. So you're fighting your battle right against it. We haven't done that since back here, which was actually the end of December. Takes time. We'll see what happens. Get enough inflation, not a high U.S. dollar, not high, really high interest rates. Gold can come alive. It's taken forever. It seems like a decade. Obviously, cryptos have done better than gold. When you look at a daily bar chart, you can see how the market is now swinging around here. And when I put the swing line on, the story starts unfolding. When you look at this chart, I define and defy, 2 parts. I defy you to tell me where the real lows in the market are, but with a swing line, I can. And the reason is I'm looking for patterns. The pattern on this chart is bullish. You still have a higher low and a higher high. Just about everywhere you'll go, if you're talking to traders, what is the definition of an uptrend or a downtrend of lower lows, lower highs? That's pretty much the standard part. You can start then from there, filtering, saying, is it getting stronger, weaker, what's it doing? But it takes that plurality to get that going. When I look at the moving averages of it, where's the battleground? You don't see it? It's crystal clear. It's the 18-day average of closes. I don't know if the trend is this is right. You see this down day right here? And this is always a problem for a swing line. You have a higher high and a lower low. Then the market comes down and the true swing line would come in here. But whenever I see a probe like that, it's generally got to take time to get it out of its way. In other words, another swing in the swing lines to get that done. Hasn't done it. So what are we fighting about? We're fighting about support at the 18-day average, resistance at the upper bowl, at the 100-day moving average of closes, the upper Bollinger Band too. My tongue was before my brain, 1803.50. So the 1800 level to 1803.50 is the resistance. You didn't quite get even to the 100-day average of closes. We keep hitting this. And even if you got through 1763.30, I'm going to repeat, I don't think that creates a downtrend. I think the market's trying to keep the upside bias of the market and fight off the momentum, which often leads price, and it's pointing down. So is everything working together? It is not. And that's the problem that gold has, and I would consider that resistance rather formidable. When we take a look at the gold-silver ratio, it still favors silver. By the way, as long as you stay under that 18-day average, it means that if prices drop, you need less ounces of silver to get an ounce of gold. Well, then the theory is silver's more valuable than gold because you're able to buy more of it. Where did silver falter? You take a look right here. This was the day that, this was yesterday. And if I had been here with you, I know what I said, the tape didn't take. What do you do the first time you hit an upper Bollinger Band? Tell me. You know what it is. That's where the pros take money off the table. That's what I'm going to teach you. That's what I say. You're not embedded with the reading. Okay, and you're going to tell me, because I had people writing me, I don't know what I'm talking about. This is where it's going to run up to 29. I said, okay. So today what the market does is it proves them right. The market did get up to 27.24, and then it promptly fell $1 an ounce. Didn't quite get back into its support area, but certainly staying within the Bollinger Bands. That's all that I'm expecting. Is there a trade here? No. You've got a higher high, a lower low, momentum pointing down. You want to trade that? Fine. I don't know how. I'm bullish as can be the copper, but I've been bullish for a long time with you here. I've been on TV stations around the world telling people that I think the market, in fact, I went on record, I said, I think it can go to $5 a pound. Now, there's a copper group that came out yesterday, and they're again quoted today, late in the day again. I think Bloomberg has the story about it, where this consult is saying that the copper market will end up in a surplus this year. And I don't care. Why? I'm a chartist. The chart has got the classic story of higher highs, higher lows. They're trying to tell me supply, demand's going to be a surplus. Okay, then why is the price going up? It's going up because whatever the case is, that surplus isn't here right now. Otherwise, it wouldn't be going up. You can get all the copper you want at a surplus price. You're not going to pay higher. So that's what the market is doing. They could be right down the road, but I don't see it here. I think the pros are still going to buy this market on each break until the red line of the slow stochastic closes under 79 with a target of now the 467 zone. In the platinum, let's get up and take a look. This is yesterday, outside day up. So until and unless the low of yesterday, which was 1195.50, is taken out, and this is what I told my morning subscribers, I'm looking for the market to make a run for the upper Bollinger Band. Momentum is flattened out. If you take that out, all bets off. Otherwise, the potential's there for that. And I think the pros were going to try to buy it today at the 1209 level, which stops under yesterday's low. Instead, the market went right on up to that. Now it's hit its upside target. It's still up tonight, and that's because the market's still looking at things that, from a positive point of view. Okay, if you take out 1195.50 just tomorrow, which is tonight, Wednesday's trade, if we think about it. That would be the second day away from that, and that would put into play getting down to these numbers. Until that happens, I think the pros are still going to buy at the 12.10.50 area, not wanting to see 11.95.50 taken out. They'll view it as an uptrend. The market bias has now flattened itself out in terms of the moment. Well, the bias is up, the momentum has flattened itself out, and the market punched through to a new high for this move. It is not a contract high, it's a new high. A new all-time high was made in the palladium market today. Yeah, these numbers are all-time highs. What's causing it? You take a look at that embedded reading. You know, and that's what I talk about in my morning subscribers all the time. I'm pointing out what it is. I developed in my enhanced Bollinger Band course that is on our website. It's under Enhanced Bollinger Band course, under the word education. You should take a look at that. And a way to come in on these type of breaks and where you would be wrong. Eventually, these things end. It's not showing any sign of it at this point. I continue to think the pros are buying it. There's a window envelope number up there that I think they're taking profit against instead of the right now the upper Bollinger Band. You have to look at some different profit areas. When you see this form, it's often a sign that there's another number at work, and I believe they're window envelopes, but that's a whole different world, and you have to learn how to work with those. In the dollar index, well, as soon as Ms. Yellen said what she did, I was watching today on the ETFs, the financial ETFs soared because banks will love if higher interest rates are coming. And I'm watching this market go and get up to its 18-day average. But what's the battle? Let's get away from today. What would I have told you last night? First challenge of the 18-day average, a lost embedded reading. Right here, I'm looking for the 18-day average of closes. That was Friday. Now I'm looking for this for tomorrow. Okay, now, is this going to be a support zone where you go back to the 18-day average or not? That's what it did. Are we trending? No. You have a lower low and a higher high in the market. Nothing there. There's been some great currency trades in others of the currencies. If you're a subscriber to my research, we've been a happy campers. It's not always that way. Friday, I wanted to go bury myself. I was so unhappy with the euro and how those things went out, and got caught in other trades, and they let us work our way out of them and catch others. Doesn't always work that way. I've told you. If something go wrong, I've probably done it in my life. Ethereum. Now, this is an $80,000 margin. Let's understand the nonsense of this. Nobody's going to trade this. Not of any volume at all. The new Bitcoin has got a margin of $2,400. You don't think it's getting a big amount of trade? You'd be wrong. Big amount of trade. It's a very successful launch of that mini contract. Now, it's a macro, they call it. It's 1/10 of a Bitcoin. That's right. Who cares? It allows you to play the game. Game plays anyways. In this, you're over the upper Bollinger Band. Do I ever tell you to buy over a Bollinger Band? Never. But you have an embedded reading. Would I be telling you the pros are going to buy this on a break? I would. I say they'll get out if the red line closes under 90, and they'll look to see where the support comes in. I'm guessing it's in that general level. It's just an educated guess on my part. So you put it together. You're trying to figure out where this is all going to go, and today was a fun trading day. I had a ball. As bad as I hated Friday, today made up for everything. It was that kind of great trading day, in my opinion at least. So let's talk about what we've got here. In my morning subscriber video, which I rarely miss putting out, I give you buy here, sell there. I want you to do this. This is where your stop is. This is what I want you to do. Bounce your ideas off a seasoned pro. Next week, I start the live, if you will, middle of the day, what's up? That's what I've decided to call it. And you can come in on a Zoom room, you can ask me the questions, it'll be fast like that, and then I'm gone. So it should be a lot of fun for you, a heck of a lot of fun for me. My preference is always to my subscribers, the paid subscribers, but you will be invited in there and you don't have to pay anything to come in. So look for this to be another way for you to go. I cover all these markets, and I'm going to cover ETFs. I'm going to cover The spider's in there, occasionally a stock. I'm not a stockbroker, so you're going to have a hard time for me to say, I want you to buy here, sell there. I don't want to play that game. I want to be an analyst in the ETFs and the other. What does this cost? $7.95 for 30 days. Come on. Go to our website, www.iraepstein.com. That's all you got to do. And when you do that, under the word research, you'll read all about this. Education is where the different courses. Take that enhanced Bollinger Band course. You're going to be shocked. It's 13 chapters, each about 6-7 minutes long, and it's very inexpensive to take. I think you'll be shocked at what you learn. I hope you are. I'm Ira Epstein. You have a great day.